JP Morgan is now talking about the end of the 4-year Bitcoin cycle. The Federal Reserve, the US Central Bank, is once again announcing interest rate cuts. Hedge fund legend Ray Dalio is even talking about starting the QE program. Now, the US Central Bank, the biggest wave of money printing could be just ahead. And Ray Dalio confirms this. Donald Trump says he has a plan B, but we're also seeing the bears. Katie Wood with ARK Invest, who are now officially withdrawing their price prediction, are now acting bearish, and Bloomberg is even expecting a massive crash. According to Bloomberg, Bitcoin will fall to $56,000. Guys, let's dive into the whole thing now. Smash the like button down below. We need every like for higher Bitcoin prices and new all-time highs. You can see it here. As a small thank you, today we're making the video right next to Satoshi Nakamoto here. Your support. Just check this out. This is the Satoshi Nakamoto statue, ever coding right here. And how epic could this background be? And check this out, you can buy drinks here. And what do you see here? A Bitcoin accepted sign, like almost everywhere in El Salvador, at least at the Bitcoin hotspots. And yeah, the Bitcoin price might still be under pressure. But here we have Stephen Miran, who is once again saying, here expected. There are expected cuts here in December. And of course, that's a bullish story. Stephen Miran also wants to stimulate the market much more than his other colleagues. He's actually one of the most bullish people when we look at the Federal Reserve. And he's also a hot candidate when it comes to possibly replacing Jerome Powell as his successor. But we also have Donald Trump here, who is now speaking out about the Supreme Court, about the trade deal, and what will happen if Donald Trump is possibly reined in and all his tariffs are declared invalid. He says he has a plan B. Could he maybe start mining Bitcoin? Is Bitcoin his plan B? Of course, it could also just be a random coincidence. But Donald Trump, as we know, at least according to his speeches, is officially a Bitcoin bull. Unofficially, we don't really know exactly where Donald Trump stands on Bitcoin. And one of the craziest stories for me, this is definitely my story of the week, is JP Morgan, who were famously anti-Bitcoin and always took shots at Bitcoin. Now Jamie Dimon has calmed down again and is suddenly at least open to Bitcoin. And now JP Morgan comes out with this. Check this out. They've just gone ahead and embraced the 4-year Bitcoin cycle. They're saying here that the Bitcoin super cycle is coming. JP Morgan is making a prediction. A Bitcoin price of $170,000 in the next 6 to 12 months. Do you know what that means? The official 4-year Bitcoin cycle would then be over. Because according to the official 4-year Bitcoin cycle, we should be heading into a bear market again in the next 6 to 12 months. JD Morgan, however, says no, that's not going to happen. We're heading into the super cycle. 170,000 is the next target here. And they say that the permanent deleveraging is complete, and that Bitcoin is historically undervalued compared to gold, which implies significant upside potential in the next 6 to 12 months. I just realized that was translated a bit incorrectly here. Perpetual deleveraging is behind us. So the deleveraging is simply behind us, according to what JP Morgan is saying here. And the thing is, we all know that Bitcoin will catch up to gold in the long run, or at least most of the people watching here do. And now JP Morgan is recognizing that too. Makes me wonder who exactly at JP Morgan is saying this. Because I can't imagine Jamie Dimon likes reading stuff like this. He says, sure, he accepts Bitcoin now, but he still thinks it's useless. He still thinks it's nonsense. So, of course, that's a really strong statement from JP Morgan. But Ray Dalio is also really going all out here. And he's one of the most hardcore hedge fund managers out there, if not the most hardcore in the world. Now he's publishing a post or an article called Stimulating into a Bubble. So basically, we're stimulating right into a bubble here. That means the markets are already inflated. And what is the US Central Bank doing now? They're going to stimulate and pump even more money into the market. And the whole article is really long and very complex. I've gone ahead and summarized it all here. We can take a look at it together. So here's the short version of the whole thing. The Federal Reserve, the US Central Bank, is stopping QT. That's something we know. It's happening in December and is getting back into QT. So basically, printing money plus financing government bonds. And this isn't happening during a crisis, but right in the middle of an asset boom. Stocks have a relatively low spread. The economy is strong. And inflation is just above the target. And it's wild that he's saying this, because just because QT stops here, that doesn't automatically mean that QT starts. But Ray Dalio is pretty convinced that they're going to switch straight from QT to QE, just like that. He assumes that we're basically already in the QE phase now, because QT has already been decided. So now it's basically just a formality until QE starts here. That means we've had a situation like this very rarely. It's summarized here again. This leads to more liquidity, lower real interest rates, higher asset prices, stocks, gold, and Bitcoin, bigger asset bubbles, and stronger inflationary pressure, which will of course also affect us. And Ray Dalio sees this as a sign of the late phase of the big debt cycle. The government has too much debt, which means there's a lack of demand for bonds. The Fed has to monetize the debt indirectly. That's basically what QE is. If there are no more buyers in the market, the US Central Bank has to step in. This will lead to the markets going completely wild, asset prices shooting to the moon, but also inflation making a comeback. and inflation will likely reach levels we haven't seen in recent years. And on top of that, the US can of course guarantee its own bailout here. He even goes further here and says that in the short term, this will lead to a melt-up, but in the long term, it will result in a massive crash, with crash risk increasing. Queuing into a bubble is more dangerous, bullish in the short term, but extremely unstable in the long run. And I mean, you don't have to be a rocket scientist to see that, but it's still nice to hear something like that coming from Ray Dalio. And he also gives a few points here about why this is particularly explosive, because normally all of this happens during a crisis, as I just mentioned. But historically, QE would simply be used when the economy is weak. That is, it's a sign of a crisis. High unemployment, low inflation, and asset prices are cheap. But now we have QE into a depression. That's the exact wording here from Ray Dalio. That means, today the economy is strong, inflation is above target, asset prices are very high, and credit markets are relaxed. QE into a bubble. This is new and dangerous, and we need to watch it very closely. And that's just wild, because that's exactly what Linnell always says, the train can't be stopped. The debt train can't be stopped. And at some point, we reach a moment where interest rates are already very, very low. There's no other option. You have to go into negative territory. You have to do even more QE. All the markets are already inflated, and you have to inflate these already inflated markets even further. And then, at some point, this train has to crash into a wall. And with stablecoins and things like that, digital euros in the EU and so on, you can, of course. You can stretch the whole thing out even longer, but they're really stuck in a huge, huge crisis here. And then the next thing that could happen is that we see disruptions in the stock market and the Bitcoin market as well. And there was also a very, very interesting assessment from Cathie Wood of ARK Invest recently, because now she's pulling back her bull case for Bitcoin and says, no, we're correcting ourselves. We were too bullish. And she also gives some interesting hints. That might also have to do, among other things, with the debt bubble here.
Stablecoins are usurping part of the role that we thought Bitcoin would play. So our bullish forecast out there is 1.5 million by 2030. Given what's happening to stablecoins, which are serving emerging markets in a way that we thought Bitcoin would, I think we could take maybe $300,000 off of that bullish case just for stablecoins. So watch that space. Stablecoins are scaling here, I think, much faster than anyone would have expected.
Here, she's pulling back her bull case from 1.5 million by 2030 and correcting it to 1.2 million, which is, of course, still very, very bullish. And she's referring here to stablecoins. And that also has to do with the US dollar crisis, because the US needs to find buyers for its government bonds. And that's why they have to. Oh, bring this in here. How bullish is that? Go ahead and show the t-shirt here. Wait. Yeah, now this isn't dumb. He's just wearing a Bitcoin t-shirt with a big Bitcoin logo on it. And then it says, I will die on this hill. And now he's driving around down there with his car, selling people drinks for Bitcoin. I mean, it just doesn't get any more bullish than that. Right here next to Satoshi Nakamoto. How awesome is that? And someone wants to tell me the Bitcoin standard isn't real yet. So anyway, then we have Cathie Wood here, who is pulling back her price target. And yeah, stablecoins, they're just wild. That's probably something Cathie Wood underestimated a bit. And that also has to do with the US debt crisis, because the US debt crisis is just pushing the US even more to rely on stablecoins. And of course, that could pull a bit of liquidity away from Bitcoin. Although I always say, stablecoins and Bitcoin actually complement each other. So I don't really see this as a big threat or anything. Someone who does see a bigger threat here is Mike McLuhan, a Bloomberg analyst. We know him. He's a familiar face, and he's criticized Bitcoin several times before. And he just said Bitcoin is now potentially on its way to $56,000. Just look at the chart. That's the mantra of the Bitcoin bulls. But the market gods can teach us humility when prices rise too high. A synonym for humility is a return to the mean. And when I look at the charts, I see how normal it was for the first cryptocurrency to pull back to its 48-month average price after similarly long rallies, like in 2025. Otherwise, the $56,000. I doubt that's going to happen, especially if we assume, like JP Morgan does, that the cycles have changed and that we simply have a shifted liquidity cycle and a lot of other factors at play. But it's also interesting to hear an assessment from Gunther Schnabel, who was a guest here with Mario Lochner, talking about the US debt crisis, the Federal Reserve, and more. How is this whole thing going to play out? How can the US get itself out of this mess? And of course, that's also extremely important for Bitcoin.
In the US, or that things go well, maybe even that the debt goes down. But the question is, if that doesn't happen, how do you get out of it? You said earlier that when this is handled through the central banks, that's basically the root of the problem for the economy and society. But the question still remains, especially with the US. We know that if they were to slam on the brakes now, if the Fed were to sharply raise interest rates or put the brakes on liquidity, if the US were to make massive spending cuts, then we would probably See a stock market crash or a global economic crisis or something along those lines.
Especially if interest rates were to rise with such high levels of debt, refinancing would become brutally expensive. So how do we get out of this debt madness without completely losing it?
So, what you're really bringing up is a fundamental issue: shock therapy versus gradualism. So what Milei did in Argentina was shock therapy. He radically cut spending, radically deregulated, and in doing so, brought inflation under control. When you put it that way, you're basically suggesting that shock therapy isn't the right approach for the US, because the US is at the center of the world economy, and the shockwaves triggered there would spread across the entire globe. That's why a gradual approach is probably better, and maybe what Donald Trump is doing right now is actually a kind of gradual approach. So, through the tax cuts, he has definitely created a lever by which the national debt as a share of GDP in the US could now be brought under control. Slowly but surely, but not through. Here, a very radical approach. He is definitely making spending cuts for public employees and also in the social welfare system, including healthcare. What he's doing is certainly reasonable, and the Fed is also acting very cautiously now. So if I had to make a prediction now about which direction the Fed's interest rate policy is heading, I couldn't make a clear forecast. On the one hand, Donald Trump says he wants the Fed to lower interest rates. The Fed has also lowered interest rates, but only very cautiously, not as extensively as the European Central Bank. And on the other hand, there's now the Treasury Secretary, Scott Bassett, who, by the way, also selects the future central bank chief for the United States of America, whom the president then proposes to Congress. This Treasury Secretary is now saying he wants the Fed to focus again on its core tasks, namely keeping prices stable and stabilizing the labor markets. So to me, that points more toward a stability-oriented monetary policy. So I do see some cautious maneuvering here. We still don't know which direction this will take, but it could also be a sign of a gradualist stabilization strategy, which will hopefully prove effective in the end.
And what a lot of people tend to forget in this whole discussion is the stablecoin and Bitcoin story. That could, of course, also play an essential role here in the US debt relief process, just like Cynthia Lummis, for example, is proposing. So, these are exciting developments. If you still want to buy Bitcoin now, oh, there's a dog walking by here. If you still want to buy Bitcoin now, I'll put a link below for 21 Bitcoin. Alright, use Bitcoin Hotel and save up to 20% on fees when buying Bitcoin. And now I'm going to head over there to that guy. You know, the one with the I will die on the hill and the Bitcoin symbol. How bullish is that? Give him a like. And until next time, peace out.